Okay, let's dive right in. We're talking about NVIDIA, a stock that's been on an absolutely incredible run. But lately, it's hit a pretty serious speed bump. You've got this powerful, long-term trend that's now clashing with some major short-term weakness, and it's creating a real tug-of-war in the market. So that leads us to the million-dollar question, right? The one everyone watching this stock is asking. Is this a temporary dip? A golden opportunity to buy into a healthy trend? Or is this a serious warning sign that the party's winding down? That's exactly what we're going to break down.
And it all starts with this one number. This was the closing price on October 10th. Think of this as our ground zero, our anchor point for this entire analysis. Keep this number in your head, because everything we talk about is going to circle right back to it.
All right, first things first. Before we get into the nitty-gritty, we have to zoom out. You got to see the big picture, right? We need to understand the entire battlefield to really make sense of what's happening on the front lines.
And here it is, the core conflict in black and white. On one side, you've got the bulls. They're looking at the stock trading comfortably above its 50-day and 200-day moving averages, and they're saying, hey, the long-term health here is fantastic. But then you've got the bears. They're pointing to that super sharp, really recent drop from the peak. And get this, it happened on huge trading volume. That just screams selling pressure. Now here's where it gets kind of interesting. When you run the numbers, the math confirms that, yeah, the overall trend is positive. But, and this is a big but, the correlation is only moderate. So what does that actually mean? It means even though the general direction is up, the path isn't a straight shot. There's a ton of noise and choppiness baked into the price action. Next up, let's pop the hood and look at the technical signals. The best way to think about these is like the dashboard gauges in your car. One gauge alone doesn't tell you the whole story, but when you look at them all together, you get a fantastic snapshot of what's happening with the engine right now. And if you're wondering what the heck is a technical indicator, don't worry, it's pretty straightforward. It's basically just a math formula that looks at a stock's past behavior, its price, its trading volume, and uses that to find patterns. It's all about trying to find a little bit of order in what can feel like total chaos.
So, here is that dashboard for NVIDIA, and wow, it is a mixed bag. The MACD, our momentum gauge, is positive. That's good, that's bullish. But then you look at the RSI, our overbought/oversold gauge, and it's just sitting in the middle, totally neutral. Then the ADX, which measures how strong the trend is actually signaling a weak trend. And to top it all off, stochastics are getting up there, approaching that overbought territory. So, see what I mean? The gauges are all telling us slightly different things. Okay, so we've checked the gauges. Now let's pull out the map and define the actual territory. We're going to pinpoint the key price levels, the floors and the ceilings, where the real battle between buyers and sellers is actually happening. Let's walk through this together. Way up at the top, that's the ceiling, the recent high. Think of that as the fortress the sellers are defending. We're currently here, on the battlefield, kind of in no man's land. Just below us is that first floor of support. That's the first line of defense for the buyers. If that line breaks, there's another safety net a little further down. The price is literally pinned between these levels.
So let's recap. We've got the big picture, we read the dashboard, and we've mapped out the battlefield. And all of this information points to two very clear, competing paths forward for NVIDIA. This is the real heart of the matter.
And here's the kicker. It all comes down to one critical price level. For the bulls to win, the price has to hold above that first floor of support. If it does, a bounce back up to that ceiling is absolutely in play. But for the bears, if they can push the price below that exact same level, the trapdoor opens. A slide down to that next safety net is very possible, maybe even lower.
We've looked at a lot of data, a lot of charts, but in the end, you have to cut through all the noise and focus on what matters most right now. So let's boil all of this down to the single most important number on the chart.
This is it, 181.91. This is not just some random number. It's the 20-day simple moving average. For traders, this is the line in the sand. It basically represents the short-term trend. So whether the stock can stay above this or breaks below it will likely tell us everything we need to know about its next big move.
And this quote just wraps everything up perfectly. The analysis basically concludes that, look, despite this recent scare, the medium-term trend is still up. However, and that's the key word, that recent pullback is a real threat. It all comes down to that key level we just identified. Holding above it suggests the uptrend continues. Breaking below it could signal a lot more trouble ahead. So there you have it. The data lays out a really clear battlefield with a definite line in the sand. The market is truly balanced on a knife's edge here,
caught between that healthy long-term trend and some very real short-term selling pressure. The big question now is, which side is going to win?